So everybody, everywhere you go, on Twitter, YouTube, freaking Telegram groups, 4chan, anywhere you go right now where there's a discussion about Bitcoin or cryptocurrencies, everybody is talking about a $14,000 Bitcoin incoming, and then a $20,000 Bitcoin incoming, then a $50,000 Bitcoin incoming. I mean, it's getting crazy. But today, you see this chart right here above me? Take a look at this. When I break this chart down for you today, okay, it's going to put a few things in perspective for you. Now, this chart could mean everything or it could mean nothing for Bitcoin, okay? I'm going to let you guys decide. For me, when I break down the data of this right here, this tells me to be cautiously optimistic about Bitcoin, because the reality is 2020 has been a year like no other, and we need to take into account everything that has happened economically, right? When we consider why the price of Bitcoin is doing what it is today and where it's going in the future. So do two things real fast. Make sure you watch this video to the very end and also hit that like and subscribe button. And like I was saying, you look anywhere right now, articles everywhere talking about the last major hurdle before Bitcoin hits 20,000. And they do cite some interesting things, and we are actually going to acknowledge this in today's video as well. US dollar weakness is propelling the Bitcoin rally. I don't believe it is the US dollar weakness that is propelling Bitcoin, okay? There is some other underlying factors that I feel that is causing the price of Bitcoin to go up, and why Bitcoin has become so interesting right now to entities like Grayscale, and why Grayscale has spent so much money on Bitcoin. And when you see these kind of exciting headlines, something else you always see is, you know, the prospective prices and the future of Bitcoin, and some CIO, CEO, CTO, CMO, CFO, one sort of freaking acronym that typically starts with the C, has something to say about Bitcoin. Now, what I find fascinating is I hate when I see these $1 trillion market cap predictions for Bitcoin, because it keeps making me wonder, okay? And here's the truth. I really answer this one realistically, not emotionally. Don't answer this one with a sense of hopium or tribalism. But really think about this for a second. If something like this were to be true, let's just say Bitcoin hits $1 trillion. How about this? Let's back it up a little bit. Let's just say the market cap goes high enough to where the price of Bitcoin is worth $100,000 per Bitcoin. At that point, let me ask you guys a question. How many of you are going to go out there and buy a whole Bitcoin? If Bitcoin were to hit $50,000 per Bitcoin, how many of you watching this right now, okay, can afford to go out there and buy 10, 20 of a whole Bitcoin? How many of you can do that? Not many of you. There's a certain what people don't think about is there's going to be a certain threshold that Bitcoin breaks to where the purchases of people like you or any other retail investor, the people, become interested. Wherever that price may be, let's just say it's $30,000. At that point, the people that become interested cannot purchase enough Bitcoin to have any sort of meaningful impact or real meaningful ownership of the Bitcoin ecosystem. At that point, when the price of Bitcoin exceeds that and hits $30,000, $100,000, it's not going to be you guys who are going to be really buying and trading Bitcoin at that point. And I mean making significant, meaningful trades and purchases. It's going to be Wall Street. It's going to be banks. It's going to be the candy of the institutions. That is the truth. That is the truth. If Bitcoin ever hits something like that, if it's a $1 trillion market cap, that puts Bitcoin between $20 and $100 million per coin. Bitcoin at a certain point will become so expensive that any meaningful ownership will belong to the institutions. Just saying. It's very. I don't know if anyone else feels anything unsettling about that idea. Now let's talk about things that people believe are going to bring us to that point. Grayscale survey said COVID-19 made Bitcoin more appealing to investors. Now, is there a reason to this? Is there any sort of logic to why COVID-19 made Bitcoin more appealing? And the answer is yes. There is actually things that happened this year that made Bitcoin the better option, and actually the smarter option. The problem that people aren't really thinking about is in 2021, will we still have the same dynamics that makes Bitcoin more appealing than the other investment opportunities? I guess the first place to start with this is silver. Precious metals is where we should start with this. And this is relevant because COVID-19, the biggest impact that COVID had was supply chains. Not just with precious metals, but even with food, commodities, trade, everything. Everything was impacted. COVID took 66% of the silver output offline. It completely disrupted the supply chain and production, mining, mind you, of silver. 66%. Think about this for a second. 66% of the output this year was taken off. The supply then became a little bit more scarce, therefore the price of silver went up. But the whole ecosystem, especially with the derivative market, relies on more output. And even now, as the supply chains start to open back up, you actually have miners, producers that are wary of actually restoring those supply chains to their pre-COVID levels. It's kind of crazy how the whole market's working right now. And check this out. Right now, okay, they're trying to open up the pipeline. Banks are encouraging it, but you have gold miners are holding back. 7 out of 10 gold miners, including Newmont, the biggest gold miner, Canada's Barrick, South Africa, so on and so forth, have planned output cuts for this year, 7%. And the reason for it, coronavirus, according to their filings. That is insane. So 7 out of 10 of your biggest ones, including the largest one, cutting back 7%. That is a disruption to the supply chain. That is a disruption to banks. That's a disruption to trading. So naturally, when you see that gold and silver have both had a serious cutback right now as far as mining and production and output, it only makes sense that Bitcoin is the most viable option in that market. Think about it. It doesn't matter how bad COVID hit. Yes, you had mining farms in China that were suffering. They were suffering, but they weren't suffering bad enough to where it disrupted the supply chain of Bitcoin. You had miners in Canada that were impacted. Miners in Siberia, miners in the US, all impacted. The biggest impact they actually suffered was lack of manpower. Lack of manpower meant that they had large portions of failure. But even though the miners failed, we know how the algorithm works. It does an adjustment. And with Bitcoin having its own healing and adjusting properties, it's just a smarter option because we know exactly how much is coming out. We know exactly how much is in the market. Therefore, with the derivative plays, guess what? You have a much better playing field. And actually, it's a safer playing field for a lot of these institutional players, especially right now, to where if you're having a situation to where you're just printing too much paper, silver and gold, and not enough is coming out, something's got to change. The money's got to move. It could be extremely dangerous to the precious metal markets to sit there and keep trying to, get blood out of a turnip, so to speak. Which brings me to this chart right here. The one thing you've been waiting for. This right here, okay? I'm telling you this, like I said, it can mean everything or it can mean nothing. But before I jump into that, something I have to acknowledge because I get asked this more than anything. It's kind of surprising. This is the biggest request that I'm getting from people. Prime XBT, okay, listen, leverage trading is extremely dangerous. It's something that I don't advise anyone to do, especially if you don't have the skills and most importantly the time. And there's 2 kinds of trading desks out there, A book and B book. B book exchanges will trade against you. They hunt down stop losses. Don't believe me? There's plenty of information out there for you to find it for yourself. Leverage trading platforms that use a B book will trade against you. Prime XBT has an A book, but even though it's not as lethal and they're not trying to knock your heads off, doesn't mean that every single one of you are going to make money, okay? The reason I'm bringing this out, because this is the biggest request I get, is the co-vesting. Will I do it? I did it today. What I did is I could have put $1,000, $2,000, or $5,000 in there, but realistically speaking, most of you will not put that in there. And the questions you guys had is, hey, if I had $100 or $500 to play with it, do you think I would make anything off of it? The answer is I don't know, but I can tell you that the people that have the co-vesting, right, the people that are up here to where you can take your Bitcoin and say, hey, you trade it for me, are people that have a track record that you can see. I put my money in number 1 and number 2. Number 1, number 2. Number 1 right here, and Slow But Sure. I put, actually, I'll break down here in a second what I put into it. But I went with these two just to see if going with the top tier ones was actually better than trying to find something that had more time, more track record. But here you can see the followers, the amount of Bitcoin that the followers have put into them, and you can see their percentage as far as profit all time and daily. Daily, they're not doing too good at all. But I went ahead and said, hey, you know what? This seems like a volatile time. Volatile times, when things are going straight up or straight down, is typically when a good trader knows what to do to make money. So here's my portfolio. I did put some Bitcoin in there. I have in Slow But Sure 1.32281. That's the amount of Bitcoin I put in there. And in the other one, I put 0.25. Number 1, as you can see, if I move my head out the way, I'm up 2.86% total today. Number 1 is up 3.45 right now, and Slow But Sure 1.74. This is not a surefire thing. This is not get rich quick, guys. But you know what? If you don't have the time to learn it, don't have the time to dedicate to it, it's kind of cool, kind of easy. I have a little bit of a risk appetite right now, so why not? If you're interested in it, check out the link down below. But the time is here. We need to break this chart down. I'm going to try to do this as much justice as I can and make this make sense to you guys right now, because this is a big deal. This can determine what is going to happen with the price of Bitcoin in the years to come. All of us suspect 2021 is going to be a massive bull market. All of us could be wrong. We could be wrong next year, okay? And let me explain. So this right here is a total production per person chart. So new US dollars printed per person in the US, $10,250 per person. New US debt, though, $11,578 per person. There's 300 and something million people in the US, so think about that for a second. That is pretty substantial. So we're acquiring more debt than we are printing money right now. But here's where things really get screwy. Because of what's happening with COVID, okay? This is the new U.S. silver minted. Now, remember, U.S. silver minted is based off of what is mined. Per person, $1.65 per person of new silver. 2020 U.S. gold coins minted per person, $4.79. Wow, so that you see how far away we are from these three numbers. These three numbers are really far away from each other. That means that we are in some serious shit, right? If you want to break it down year to date, now this is as of September. Okay, this is as of September. I know we're in October, so this is 1 month old. So the data, who knows how far off this could be right now? I mean, a lot happens in a month, especially with the year of COVID. But U.S. gold ounces. Total ounces manufactured, 826,000. That's $1.6 billion worth, and that's $4.79 per person worth. Silver ounces, 22,261,500. That's $544 million, or $65 per person. Now check this out. U.S. money supply, $3.4 trillion. $3.4 trillion, or $10,250 per person. U.S. debt, $3.8 trillion, or $11,578. So we are still in the hole, even though we've printed a shit ton of money. It just occurred to me my big fat head was in the way during the whole time. So here is that chart right there. If you want to take a look at it, screenshot it, study it real fast. But let me move on to the part that's really, really something that's going to make you scratch your head here a little bit. So if you take it in a macroeconomic view here, so the total U.S. money supply over time, okay, look at this. Substantial for 2020. It is substantial. But if you put it this way, right here, okay, this should really get the brain juices going here if you put it right here. For every ounce of gold created in 2020, there has been $4 million US dollars added to the money supply. Now, if you think about that for a second, if you remember the other chart, we're at $3.4 million. That's because the United States did a $3 trillion stimulus package right here. We can kind of break it down over here. And let me move myself out the way. Of course, the current economic conditions have been catalysts for ballooning money supply. In the response to the COVID-19 pandemic, the U.S. government issued over $3 trillion in fiscal stimulus. In turn, the U.S. Federal Reserve has increased the money supply by 3.4 from January to September. Of the 3.4, only Look at this, okay? This is what needs to resonate with you. Only $4 million is actual, what you can say, substantiated money. 3 trillion of it is unsubstantiated money right now. So here's what I want you guys to think about right now, okay? We know that we've been printing money like crazy. Now we just kind of broke down the math a little bit. We know that silver production is down 66%. We know gold production is down 7% per major company. All right, there are 7 out of 10 major ones, including the largest one. That's a lot of freaking gold if we actually go across the board. That's a significant decrease in gold. Now, aside from just them cutting back the amount they're mining, the supply chain as far as distribution of the gold is also cut off. So we're all kinds of cluster, you know what, right? We're messed up everywhere. So here's my question. Right now we know, okay, investors especially know that we have to print a whole lot of dollars to keep the whole economy going. The question is, what happens when the gold supply chain and silver supply chain open back up full steam pre-COVID levels? And this is a question everyone needs to ask, because I suspect right now we're seeing massive investment going over to Bitcoin because the whole ecosystem is easily tracked with blockchain. We actually know exactly how much is being mined almost every minute. I mean, it is down to details. You can't do that with gold. With gold, everything is speculated. We don't know exactly how much gold or silver is in the ground. It's really hard to manage exactly how much is coming out of the ground. And with conditions that we're having in 2020, it's all jacked up. Right? So it only makes sense that Bitcoin is getting more investment right now. But here's something else I want you to think about. If the supply chain opens back up in 2021 and everything goes full steam, it only makes sense at that point knowing we've had a deficiency in those precious metals. And with that deficiency, we have a huge gap between $3 trillion and what's actually substantiated. It would make a lot of sense to me that we'll see gold and silver rally like it's never rallied before in some point in the future. If it's not 21, it's 2022. I don't know when it's going to be. I suspect sooner than later. Personally, I do suspect sooner than later because, you know, you're balancing a ball with a knife with so much paper, silver, and gold out there, and then not enough of the physical assets out there to substantiate it. On top of that, I know we don't have the gold standard with the US dollar, but the Fed still utilizes gold as part of a metric for the value of the US dollar, right? It's not necessarily pegged, but it's still part of the metrics. There's a huge deficiency in that area as well. So I suspect that when things do return 100% the way they were, I suspect that Bitcoin not necessarily going to be dropped like a bad habit, but it will probably take a back seat. To gold and silver because they have to. You know what I mean? It's not because Bitcoin's bad, because they have to. So I feel before that happens, though, Bitcoin will rally like it's never rallied before. I do. I do think $20,000 could potentially be hit by the end of the year. I do believe that the price is going to go crazy before that happens. But when it does happen, I have a feeling it's going to flip and a lot of money is going to go back into gold and silver because it has to. But with that information, I want to know what you guys think. Tell me what you guys think about that data. I could be wrong. I could be entirely wrong. But there's one more thing that we have to cover today. So BitBoy made a video yesterday. He included me at the very end of the segment. I think I should be in the beginning next time, just saying. But listen, he comes to go to bat for Howdo and Somi in response to what I said in my previous video. Here's something that nobody's asking. There's a question here that I feel like everyone should ask. Why wait so long to respond? Why wait so long to say anything about Hyper or Somi, considering the fact that you are an advisor to one of them, BitBoy, considering the fact that you say you believe in them, considering the fact that you support them? Why not support them through the darkest hours, through the time that they are getting pounded and dumped on the hardest? That is something that just makes no sense to me. And the reason I point this out is something you guys know about me is if I believe in something, I support it. Here's a good example here on Twitter. I support Haka through their darkest hours. I know that their price is getting hammered. I know that they're getting crushed. Even though they're getting crushed, I'm still there. I still support them. They have good tech. They're going places, and I firmly believe that. You didn't see that kind of response out of BitBoy. It was kind of a delayed reaction, a late reaction there. I don't know. Kind of really suspect if you ask me. So I don't think he's a bad guy, though, okay? This is not me saying go out there and attack him and try to rip his head off. This is the cryptocurrency community. Actually, once upon a time, this used to be a community back in 2017, but now it seems like cryptocurrency freaking lynch mobs. Let's not form a lynch mob here, but I want to have a constructive conversation about this because I'm really curious. Why comment so late on those two projects as your community is getting smacked in the head? But that is it for today, guys. That is it for today. I hope you guys enjoyed, and I hope you guys learned something today. I try to bring as much value as possible. But listen, I really think you should break down those charts and that data, because there's a good potential that in 2021, we could see the market focus strictly on precious metals. Just saying, there's a huge gap between precious metals, dollars, huge gap between, US dollar and debt right now too. It's pretty substantial. All right, guys, listen, I hope you guys enjoy the rest of your day. Peace out.